Rohit, the kind of news flow that we've had and the reaction that we've had, the market, by the way, is already recovering. We were down 100, we are down 60 now. So it isn't even, the cut is not even lasting 3 minutes. What do you think the market does, Rohit, in light of the news flow, the tax news flow?
Well, I really don't like the idea that, I react to this particular news because, when the market moves on the basis of news, sometimes it gets discounted in a day or two. In the sense that, my view has been negative on the market since it peaked at 79.80 more than a week ago. In that sense, when I look at it, it looks good that, it's moving in my favor. But I'll tell you this much, that whenever markets react to news, they often can rebound. It wouldn't be surprising that the market is back where it was in a day. But that said, my overall sense on the market continues to be negative. So irrespective of how it responds to the news and then whether it comes back on it, I think the rally itself is in the process of exhausting, not just in India, around the world. I think we've had a long equity rally which is rolling over. Several Asian markets have already started to decline. We ourselves had quite a dip up to last week, apart from yesterday's bounce back. So my sense is that trend down would essentially continue, irrespective of what we do in the next 1 to 2 days based on this particular news flow.
Absolutely. Rohit, otherwise, what's your sense? Is the market set for a breakout?
No, like I said, it's topped out at 79.80. I think it was a bear market rally. I don't think we are into a bull market. My sense currently is that we are not getting past the 8,000 mark, and in that sense, we should be looking at going back down, testing all the supports along the way, 7,500, maybe 7,300, maybe lower. I don't know how it pans out, but essentially I'm seeing a sell-off in global equities occurring over the next month or two. And you need to be open to the downside potential that will bring. I'm not looking at a breakout beyond 8,000 right now. If it happens, then we'll look at what needs to be done. But my current view is that we are not likely to go there. We are likely to go much lower from here on the back of what might be a sell-off again in global emerging markets and commodities, and what might be again a rally in the dollar in the a month ahead. So a complete reversal from what we've seen in the last couple of months. The recovery we saw from Jan onwards in emerging markets is almost over. The rebound in dollar, the reflation trade is almost over. And so you're already seeing the reversal of that in, say, base metal prices. If you're watching those, they've fallen the hardest. They typically tend to lead. Crude is usually a laggard in that move. And so you don't see so much of a sell-off there, but you're already seeing it in the metal prices. And I think it will continue for some time. So you're likely to see a complete reversal of that trade right now.
Fair enough. Rohit, fundamental, and your view is notwithstanding anything which might come up on earnings, etc., right? I mean, the structure is basically poor. I was speaking with Anil Magnani yesterday, and he was saying that he would be a lot more comfortable forming that view. He also thinks the market is kind of topped out and it will correct. But his view was he would be a lot more, it'd be easier for him to form that view if the market just came up to almost 8,000, and that would, in a way, complete a formation. And then the market corrects. Would you agree with that, or you think, well, obviously it doesn't necessarily have to do that, but the market can just start correcting from here?
I think it can start correcting from here. The minor gyrations, as to whether you do a slight higher high beyond 79.80 or not is, a matter of debate and discussion. The question is whether you're expecting in general the market to, move lower from here. So I think in that sense, I think we would probably align on that. And it's probably more stock specific. So there are stocks which are making new highs. You can look at HDFC Bank and, Kotak, which recently surpassed their highs seen in January. actually. So there are particular stocks which are continuing to head higher, but that's a very, very limited basket. It's like X% of the entire market. Rest of them are essentially doing retracements. They've hit some kind of key levels. Some stocks are already selling off, like we've seen, say, Tata Motors, or we've seen the tech stocks already weaken. We are seeing a lot of the banking stocks weaken, at least the the PSU and other banks which have faced a difficult time in the previous quarter as well. So I'll not try to fine tune the last 50 points on the Nifty. Will it get past that level? My view has been since 1780 that we are headed lower. If we do go beyond that, then it would be a surprise move. So I'm not expecting a new high, but if it does happen, then we just deal with it, is how I'll look at it. And like you said, should we respond to fundamental events? See, if you're looking at earnings and you're seeing that, well, the worst in earnings is over, I don't know many people who saw the worst in earnings coming, so there are very few people who expected earnings to degrow for 4 quarters. And the same is even the US market. You have the 5th quarter of negative earnings growth. So to say that, you're going to have next 3 quarters of positive earnings, I think nobody knows. It's just, a flash in the pan. So I don't really go by quarter to quarter. I would like to look at a trend. And it's probably too early to say that the trend has changed.
Trading at. Rohit, I mean, in the past when you've come on, you've talked about, sugar stocks, some other agriculture related stocks, etc. Still interest there? Interested in those?
Yeah, those are longer term ideas, and I think in the near term, because like I said, a lot of it is related to commodity prices, and we are seeing some kind of a correction in commodity prices. So near term, it's possible that we do see a correction even in those segments. So you will have to be a little careful with what the market does. But I think longer term, we have seen an upturn in the commodity price cycle. So the sugar price cycle is probably still be positive. But if sugar prices continue to correct maybe for a month or two, it could be a period of correction or consolidation in the sector as well. And then note that, when markets react, almost everything tends to fall with it. And even stocks that are outperforming over the long term will tend to see a near-term reaction to that. So you need to be aware of that as well. But if I take a 6 to 12 month view, my sense is still that you're likely to see higher prices for agro commodities, which has been my view, and clearly it's apparent on sugar prices, especially domestic sugar prices also, which I studied last week, have shown a pretty serious advance, which looks like the start of a trend, but they've started to correct a bit, and so one needs to watch out for that.